What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about why a lot of people are going to choose to sell their entire portfolios before the end of the year, or at the very least, cash out in certain areas or liquidate portions of their portfolios before the end of the year. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos. Subscribe to my second channel for weekly videos. Get yourself some DYDSS merchandise to help support the channel. Try out some G Fuel Energy Formula, $5 off the first order by clicking the link in the description. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. Refer one friend by the end of the month, and they're going to give you 1 free share of Google with the chance of winning all the way up to 20 free shares of Google. Each share is worth about $90 as I'm filming this video. For every friend you refer after that, you're going to get 15 free fractional shares and an entry to the New Year prize board. Everything will be linked in the description. All right, so today I wanted to talk about selling everything before New Year's Day. Selling everything before 2022 finally comes to an end. Now, not everyone is going to be doing this. I would assume more people are going to be buying in than cashing out, if I'm going to be honest with you, especially this time of year. But I think, or I know for an absolute fact, I should say, that there will be a lot of people, an immense amount of people selling while they still can. Now, I know that sounds like a bad thing. I know that sounds like, oh my God, something terrible is going to happen on January 1st or 2nd or 3rd or 12th or whatever. I know a lot of people are listening right now and be like, oh God, what terrible, horrible thing is going to happen? And the answer is end of the tax year. This is something that people do every single year during the good years, during the bad years, and I want to explain why. What's the difference between selling at the end of this year versus the very beginning of next year? What difference does it make, and what does the end of the tax year really have to do with anything? Why not just wait until the new year? If stocks are going up, especially like what we saw last year in 2021, everything was going up. The whole year, the whole year was spent in the green. We barely saw any red days at all. Every day, things were just climbing higher and higher and higher and higher and higher and higher and higher. And my honest expectation that year was that we were going to see an end of the year sell-off, and I was wrong by one day. We did not see that end of the year sell-off. I looked at it. I closely examined everything on the last open market trading day that year, last year, and it didn't happen. But guess what? The first open market trading day of the following year, everything, by the way, that was this year, 2022, everything started to nosedive. And this year, 2022, we have seen far more red days than green days. But the market's actually pretty strong at the moment. We're moving in a more upward direction. We're seeing far more green than red, but the year itself has been far more red than green. So why are people going to sell? I personally believe that a lot of people are going to be selling this year to offset some of their gains. This is something called tax loss harvesting. A lot of people, when they make money in the stock market, or even in real estate, or their business, or whatever the case may be, and by the way, ask your accountant, but I'm pretty sure the same thing would go for silver and gold as well. If you make money in an investment and you sell, see, you could make money on paper. You could 10x, you could 100x your investment, but if you don't sell, you don't owe anything. Sorry, I'm outside. I apologize for all the background noise, but here's the thing. Let's just say you invest $1,000. The beginning of the year goes by. Now, all of a sudden, at the end of the year, right now, it's worth $1,500. So you sell. You cash out the entire thing. Do you owe taxes on the $1,500? No, you do not. You only owe taxes on that $500 gain. The original $1,000, that's yours to begin with. That was yours from the start, and that's yours still today. The $500 gain that you saw attached to your $1,000 investment, that's what you owe taxes on. But guess what? What if you sell something else at a $500 loss? That offsets the $500 gain. See, that's the cool thing about the stock market. And obviously, by the way, you never want to lose money. It's better to pay taxes on a gain than it is to lose money on a loss, obviously. even when it comes to tax loss harvesting. You want everything to go up. You want there to be a gain everywhere. You want to see green in all aspects of your portfolio. You don't want to see anything go down. Nobody intentionally buys a loser so that they can offset their gains, at least not to my knowledge. That'd be pretty stupid. It's better to pay taxes than it is to offset a gain with a loss. But that's what a lot of people do. People make investments all throughout the year. Some good, some great, some bad, some terrible. So when it gets time to close the chapter of the year and move on into the next year, before we move into the new tax year, people sell their losers because they're also selling their winners, and they want to reduce that tax bill to the best of their ability. This is something that people do every single year, and there's nothing wrong with that. It's a perfectly... People do it. It's encouraged to do it. There's nothing wrong with that, and a lot of people do. So my honest expectation for the end of the, or for the rest of the year, I should say, I can't really make any full-on predictions. I personally believe we're going to see, I think we're going to close the year in the green. I think the rest of the month is going to be spent moving in an upward direction. I could be wrong. We're getting really close to the end of the year, and we've actually been seeing a little bit more red than green. So who knows at this point? It's not really a full-on prediction, but I personally am leaning more in the direction of the market moving up rather than down to end the year off. I think we're going to end the year off pretty strong, even though we're definitely in a bear market. I think it's going to pick up a little bit, but who knows? Anyway, that's not really the point, and that's not really the moral of the story, and that's neither here nor there. But a lot of people are going to be cashing out. A lot of people are going to be selling off. A lot of people are going to be liquidating their portfolios because before the tax year is up and they're cashing out on some of their gains, they're going to look to harvest. Tax loss harvesting. They're going to sell the losers as well. They're going to sell the winners and the losers to offset some of the win and reduce that tax bill. This is what we see every year. This is what we have seen every year, and this is what we're going to continue to see every year as long as this tax loss harvesting exists. Another thing I think we're going to see a lot of, people maxing out their Roth IRAs for the year. A lot of people, I would assume, probably already have. Believe it or not, a lot of people do this in January. A lot of people just make one full-on investment and max it out as soon as they can at the beginning of the year, and then they don't even look at it for the rest of the year. I like to make monthly contributions to my Roth IRA, and I actually, believe it or not, I guess you can say I make weekly contributions because I put cash into it every week, but every month, at the end of the month, I take that uninvested cash and I invest it. So this is something that a lot of people do at the moment, 2022. The max contribution for a Roth IRA is $6,000 for the year, which I know doesn't sound like very much, but with the market returning an average of 7 or 8% annually, with dividends reinvested, multiplied by 20, 30, 40, 50 years, easy way to become a millionaire, if you're patient. But anyway, at the moment, with a $6,000 maximum contribution limit, it goes up next year. We'll get into that in just one moment. Also, by the way, like I said before in the intro, how I was talking about Webull and the fact that you can get up to 12 free fractional shares by downloading the app and funding your account. And you can get a free share of Google just by referring one friend, maybe all the way up to 20 free shares of Google, each worth about $90 right now. And for every friend you refer after that, you get 15 free fractional shares of some of the most rock-solid companies on the planet: Ford, Coca-Cola, Starbucks, Apple, the list goes on. And you're going to get entries to the New Year prize board. That app that I was just talking about, you can also set yourself up a Roth IRA on there, which is your own personal individual retirement account, the one we're talking about, with a $6,000 yearly contribution limit. That's $500 a month if you want to make monthly contributions, and you don't have to max it out at all. You can invest $100 a month. You can invest $5 a month for all anybody cares. It's whatever you want, but maximum $6,000. I think a lot of people are going to be maxing out their Roth IRAs if they haven't already done so. And then moving on into 2023, they're actually increasing it to $6,500, from $6,000 to $6,500. So if you want to make monthly contributions, I know it might sound a little bit confusing, but $6,500 If you divide that by 12, that's a monthly contribution of $541.67. Or if you want to make it a little bit more simple, continue making $500 a month contributions, and then in December of next year, invest $1,000 as opposed to $500. That's how you can reach $6,500 by making monthly contributions in 2023, which I know for an absolute fact a lot of people are going to do. So anyway, coming around full circle, a lot of people are cashing out right now. A lot of people are liquidating their portfolios, or at least portions of their portfolios. A lot of people are cashing out on some of their gains. And guess what? A lot of people are letting go of some of their losers, some of the duds, some of the bad investments, selling at a loss to offset some of their gains. And then moving on into 2023, guess what? The same thing is going to happen. People are going to be investing all year long. People are going to be holding on for the long term, some of their longer positions, because there's obviously a difference between long-term capital gains, which is an investment held for over a year, versus short-term capital gains, which is an investment held under a year. If you buy something in January and sell it in, I don't know, April or May, short-term capital gains, you're going to owe more in taxes on that gain, as opposed to holding on to that investment over a year. You buy it in January and you wait until January of the following year, or February of the following year, or 3, 4, 5, 6, 10, 20 years down the road. You're going to owe less in taxes. This is an incentive for people to buy in and invest in the market, invest in the economy, and hold on for the long term. It incentivizes people to think more long term. That's why it's called long-term capital gains, and not be so short-sighted and make emotional decisions and try to get out while you're ahead after 2 weeks in the market, or go running for the hills after 3 months and you finally start to see a little bit of red, or you go underwater momentarily and you get all freaked out. Long-term capital gains, you're taxed at a much smaller amount than if you were to sell something after investing in less than a year. Hopefully that makes sense. But a lot of people are going to be liquidating their portfolios this year, or portions of it, to offset some of their gains. They're going to be selling off some of their losers to reduce the tax bill that they owe on all of their winners. So hopefully that clears things up. Hopefully this video was some financial entertainment as we're coming to the very end of 2022. I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. Have you ever done tax loss harvesting before? Have you ever sold anything at a loss to offset some of your gains? This is something that I'm not opposed to. There's nothing in the world wrong with it. However, I've never sold anything at a gain. I've never sold anything at all. And I've got tons of free stocks even. I've never even sold any of those. Will I sell at some point in the future? Maybe. I'll probably sell something somewhere down the line. But at the moment, I've been investing for a couple of years now. I've never sold a single stock. Nothing. I've never sold a winner, never sold a loser. And by the way, I have far more winners than losers, just to be clear. And I've never sold anything that I've gotten for free. Every single asset that I've bought into, I still hold today. Every single silver coin, round and bar, every single gold coin, everything I still own. I've never sold any of my physical silver or gold. I've never sold any stocks. I've never sold anything. Will I at some point in the future? I'm sure I will. But as of today, I have not. But I want to know, have you ever sold something at a loss to offset a gain? Let me know in the comments. And if you guys like today's video, please hit that like button. Subscribe if you're new. Subscribe to my second channel, which is my backup channel for exclusive weekly content. Go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. They have buy one, get one free sales going on periodically throughout the month, so go ahead and buy one. Maybe you'll be able to get one free and get $5 off on top of that. Link in the description. And of course, one more time, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. You could deposit as little as you'd like, even as little as a penny. It still works, it still counts, you still get your up to 12 free fractional shares. If you refer one friend, just one friend, normally you got to refer 3 in a month. This time you only got to refer 1. Webull's going to give you a guaranteed free share of Google. with the chance of winning all the way up to 20 free shares of Google. Do not pass up on an opportunity. Each share of Google, as I'm filming the video, is worth about $90, give or take. And for every friend you refer after that, Weeble's going to give you 15 free fractional shares of some of the most rock-solid companies on the planet. Ford, Coca-Cola, Starbucks, Apple, the list goes on. And for every friend you refer, they're also going to give you an entry to the New Year prize board, which means in January, they're going to be taking all the people that made referrals in December, and they're going to be picking a couple random people from that list and giving them even more free shares of Google. Everything will be linked in the description. If you don't want the free stocks, if you don't want the free shares, go and get them anyway. They're free. Then just sell them. Congratulations, now you have the cash to go and invest elsewhere. And you're like, oh, I don't want to invest in Google stock. Then don't. Get the free Google stock, sell it, and invest in the stock that you want to invest in. Or just take the cash and go to the coin shop and get some silver and gold if that's what you want. It's your currency to do what you want with. Everything will be linked in the description. And once again, I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. Are you familiar with tax loss harvesting? Have you ever done this before? Have you ever sold a loser to offset the gains or to offset the taxes that you owe on a winner? Have you ever sold at a loss to offset a gain? And if not, is this something that you would do? Ask your accountant about it. People do this all the time. Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Just a smiling. Peace.